Good day, subscribers. Thank you so much for joining me. Today, I am Jeremy, and this is the Financial Education Channel, and today we're talking about Starbucks. We're talking, is Starbucks stock a buy right now, guys? Now, this video had been requested from quite a few of you guys, and in the news lately, Starbucks has been in the news because their CEO has stepped down from that CEO position, Mr. Howard Schultz. Just a legendary businessman, you know, self-made billionaire. He just stepped down from CEO a couple days ago, and compounded with a lot of you guys requesting for me to break down the stock, I just thought this would be a great one to break down. So first off, we're going to act like we don't know what Starbucks is. What is Starbucks? Starbucks is a premier roaster, marketer, and retailer of specialty coffees in the world, operating in 68 countries. Now, for you guys who do not understand what Starbucks is, they get the majority of their business from their retail stores, which are basically, they serve you fancy coffee or just regular coffee or frappuccinos, iced lattes, all those kinds of things. They also serve some food items. They have like egg sandwiches, they have coffee cakes, all those type of sweet things, honey buns, all those yummy things. That's what Starbucks is. That's where it gets the majority of its revenue and profits from. It does have some other smaller businesses, which is like, you know, licensing their products so they can use the Starbucks name on things where they sell in grocery stores. They also own the Teavana brand, the Tazo Tea brand, Seattle's Best Coffee. So any of those products you might see in your local grocery store, those are all licenses of Starbucks. So Starbucks brings in revenue and brings in profits from all of those brands as well. But the majority of their revenue, the majority of their profits by far, they get from Starbucks, little stores that serve coffee basically and food items. So that's where they get their money from. Now, let's look at some things here, guys. So company-operated store data. I thought this was very interesting. So these are company-operated stores. They have 7,500 stores in the United States alone. Now, all we're paying attention to on this list is the United States and China. China, they only have 1,000 stores. Now let's go ahead and let's look at the licensed stores. Licensed stores, they have just under 5,000 in the U.S. By the way, we're looking at all the way on the right-hand column at these numbers, guys, all the way on the right. Almost 5,000 stores in the U.S. licensed stores as well. So that puts them, you know, around 13,000 stores in the United States. And then they have only 785 in China. So they have basically less than 2,000 restaurants or stores or whatever you want to call them in China currently. Versus, you know, the United States has upwards of 14,000. The reason I highlight this, guys, is because the opportunity in China is huge for Starbucks. You know, Howard Schultz, you know, in so many interviews, he talks about China and how China has a potential to be a bigger market for Starbucks than the United States. I absolutely agree with this. You know, in 10 years from now, I would not be surprised if they have more revenue and profits actually coming from China and the United States. It's simple, you know, the law of large numbers. China is much less competitive in this space, which is the United States is getting more competitive. We'll talk about that in a little bit. And then with the amount of Chinese people that are moving into the middle class, which are Starbucks core customers, that makes the opportunity in China huge. You know, we're looking at a middle class in China that will be double the size of the United States here within the next decade. So, you know, all this adds up and it bodes very well for China. So China, you know, is just a huge growth market for Starbucks, guys. Something to definitely keep an eye on, and China is going to be very important in their whole growth story. So, they get 73% of their revenue from beverages. 73% of their revenue from beverages. The other 19% comes from food. Now, they've always served things like coffee cakes and all those kinds of things. You know, bagels. They've served things like that for quite a while. But they have been getting into the egg sandwiches, all those kinds of things, guys, where, you know, they're kind of competing against maybe the McDonald's of the world. They're a little more expensive, but they're kind of competing in that space. I was just at Starbucks actually earlier this week. I had lunch at Starbucks. I had one of their egg sandwiches. It was all right. They got work to do if they're going to make that revenue into like a 50-50 split. If they want to get that anywhere close to a 50-50 split, they got a lot of work to do in food, but they're focusing on it, and they're focusing very hard on it. And I wouldn't be surprised if someday that revenue is split 50-50, you know, half coming from beverages, half coming from food. We'll see how that plays out. That's another huge growth opportunity for Starbucks. If they can start converting these people that just go in for coffee to start getting food, that's a big, big opportunity for them. Now we're in the risk factors section of the 10K, the annual report. We're in the risk factors, and I'm highlighting 2 risk factors here on this page for you guys. The first one is we face intense competition in each of our channels and markets, which could lead to reduced profitability. That's number 1. And then number 2, we are highly dependent on financial performance of our Americas operating segment. Our financial performance is highly dependent on our Americas operating segment, which is comprised of approximately 69% of total revenue. So let's start off with that last one we just talked about there. 69% of their revenue is coming from the Americas. That's a huge need for them to diversify. And that leads into the top one, which is we may face intense competition. And that could lead to lower profitability. In the United States, I see the competitive landscape in Starbucks' business getting more and more competitive. I see more and more mom and pop type coffee shops opening up and competing in this space. I see the older competitors like the Coffee Bean and whatnot trying to come in and try to take a little bit of market share away from Starbucks. I see the coffee space just getting more and more competitive. Out here on the West Coast, we have a brand that's expanding called Dutch Bros. And absolutely, Dutch Bros is kicking Starbucks ass in every market that I've ever been into. The Dutch Bros lines are much longer than the Starbucks lines, and there's so much hype around this Dutch Bros brand that I think this is a huge competitor that Starbucks needs to watch out for. Dutch Bros. Keep an eye on that. If you guys have never heard of it, you will one day. Believe me, you will hear about this Dutch Bros. I have so many friends that post pictures on Facebook. Oh, Dutch Bros, I've drank it. Every time we go to, let's say, Arizona, you know, when I'm visiting family out there and whatnot, they have Dutch Bros out there. I always go to Dutch Bros over Starbucks because you get way more product and it's just freaking better. There's no other way about it. And I'm a pretty hardcore Starbucks customer, and so they win me over. And so I just see the United States getting more and more competitive when 69% of your revenue is coming from the Americas segment. That's not a good thing for Starbucks. So Starbucks needs to keep competing harder. They need to keep innovating. They need to keep pushing food revenues because that is a space where they can definitely grow. Let's go ahead, and now we're looking at this next risk factor here in the 10K section, which is the loss of key personnel or difficulties recruiting or retaining qualified personnel could adversely impact our business and financial results. Well, what just happened a couple days ago? Howard Schultz, the CEO, he has now stepped down. Here's the article here. Howard Schultz, a self-made billionaire and Starbucks longtime chairman and CEO, announced on Thursday that he is stepping away from the role of chief executive for the second time in 16 years. The move is almost certain to fan speculation that he's going to do a potential, political office run. Who knows about that? That's rumors. But the next paragraph here, Starbucks said Thursday afternoon that Schultz will give up his CEO title and become executive chairman on April 3rd, 2017, so about 3-4 months from now. Schultz said Thursday that it will focus on developing and expanding Starbucks Reserve Roasteries, a new strategic initiative for the coffee giant. Now, guys, I'm going to put up some pictures here of these new, I guess you'd call it Starbucks Reserve type restaurants they're going to have, or the technical term for them is Starbucks Reserve Roasteries. Now on your screen now, you're going to see some of these pictures, and wow, this place is freaking epic. They are monstrous places. They're like, I guess you could call them like a super upscale, huge type bar. You know what someone that drinks high-end wines might go to or something, but this is on such a huge scale, and it's all focused around coffee, and some of these coffees can run upwards of $12 for a cup of coffee at this place. But I think this is a huge good move, in my opinion, of Starbucks, and I think this is something they need to for sure try to expand on, and I think it's good that he is focusing on this brand specifically, because there's not a lot to focus on as far as the Starbucks brand goes. The stores are pretty much all built out, at least in the United States. The United States, there's not a lot more places you can put Starbucks. Let's be honest, guys. They have 14,000 stores here already. Not a lot more places in the United States you can put them. Internationally, we talked about that. China, there's huge potential. That brand pretty much runs itself. Well, you just need the managers to watch over everybody, and then this manager to watch over that manager, so on and so forth. That pretty much runs itself. This new initiative, I think, is a huge opportunity here because Starbucks has a chance to take things to the next level. Right now, Starbucks is the same old Starbucks that we saw 20 years ago, which was really creative and really innovative 20 years ago, guys, when this came out. I remember being a kid, and if you went to Starbucks, that was like the coolest thing ever, and it was really neat experience, and you were lucky to even get a spot to sit down in the store, but if you did, it was like a cool experience. You sat back and talked with your friends and whatnot and drank at that time it was probably $3 Frappuccino or whatever. Now it's like $5 or $6. And that was the experience, and that was really cool at the time. Now that's everybody. Everybody offers that, and free Wi-Fi, the Coffee Bean does, and every other coffee shop, mom and pop coffee shop, all these little chains, they all offer that type of experience for the same amount of money because it's damn profitable when you can make a drink for 50, 75 cents and sell it for $5 as far as the cost of what actually goes into that drink. So a huge opportunity for Starbucks as far as this new brand goes because it will take things way to the next level. They're way more expensive stores, but if they're getting way more profits from these and taking things to the next level, then the profits will end up coming to them. When you're selling coffee for $12 a cup or whatever they have the chance at with this new place, I think it's a huge opportunity, guys. I'm happy to see they're trying to expand on this, and we'll see what happens. If they can make this a success, this will change Starbucks' whole growth model from just being, we're getting into food and we're expanding in China and some of the other emerging markets to, okay, we got this new brand that we can actually take across the United States and kill off all this other competition we have coming from other places. Because it would if they can make that successful. Next up, the performance graph over the last 5 years. Of course, when looking at investment, the past doesn't matter all that much, but I thought this would be fun to show you guys. If you had $100 invested in 2010 in Starbucks, it would now be worth, as of September of 2015, it would have been worth just under $500. Versus if you invested that in the S&P, it would be a little over around $200. So you can see here, guys. This is another company this is why it pays to be a stock picker and a good stock picker. If you had seen the vision of Starbucks and you had seen this growth coming ahead, you could have played this, you could have invested in this and made 5 times your money in 5 years. That's why it pays to be a stock picker versus just investing in the stock market as a whole, because look at the S&P, yeah, you would have doubled your money. That's not bad. That's nothing to sneeze at, doubling your money in 5 years. If you would have, that's actually if you invested in the NASDAQ. The S&P 500, actually, you wouldn't even have doubled your money. You would have about $187 before you had $100. So you can see, guys, it pays to be a stock picker. If you can do it right, you can make a lot of money in a very short span of time. 5 years is not that long. So now we're looking at some of these sales growth they have here. Now this is just comparable store sales. So this has nothing to do with like revenue being up from new stores and whatnot. This is comparable store sales. So stores that were open at least a year, how much did their sales go up or down in the next year? So we're looking all the way to the left-hand side here, September 27, 2015, that year, the 52 weeks, America's sales growth of 7%, extremely strong. They're fighting off the competition very well in North America so far. Look at China's sales up 9%. Comparable store sales. I want to reiterate that. This is comparable store sales up 9%. Overall, the sales are up 7%. So we see here, guys, that they're fighting off the competition real good so far in North America. Now, I think it's going to get more competitive as the years go on as far as the regular Starbucks brand goes. But right now they're kicking butt and they're fighting them off good. They're growing the business. And China, 9% comp store sales. Imagine once they get all these Starbucks built out in China. Holy smokes, that's going to be a beast for them. Now, let's go ahead and look at that income statement here, guys. So all the way on the right-hand side, we have 2013. All the way on the left-hand side, we have 2015. They did $11.7 billion in company-operated store revenue in 2013. They did over $15 billion last year. Total net revenues, which is a few lines down there, they did $14.8 billion in 2013 versus $19.1 billion in last year. So great growth, very impressive when you're a company that size. Now we're going to look toward the bottom here at the EPS, earnings per share basic. They went from $1.37 in 2014 to last year they did $1.84. So we can see here, guys, they're growing revenues very nice and they're growing in net profits, EPS, earnings per share, they're growing that at even a better rate. even a better rate than their growing revenues. So this income statement I'm very impressed with, because Starbucks is a big company, and when you can grow like that and you're in the restaurant game, that's very impressive, very impressive. Let's look at the balance sheet now. We're just focusing on 2015 here, which is all the way on the left here. Cash, they have $1.5 billion. Short-term investments, $81 million. Long-term investments, they have $312 million. We're going ahead and looking at the liabilities now. They have long-term debt of $2.3 billion. So I look at their balance sheet here, guys, on Starbucks, and I say that's a decent balance sheet. It's about average. It's nothing very impressive. I would think they would actually have more cash in investments versus debt than they do. They don't, so it's an okay balance sheet. Nothing to worry about, but at the same time, nothing to say, whoa, such a great balance sheet. Not really. So, is this company a deal? Right now, their shares are trading at $57. Their 52-week range is $50 to $62, so they're kind of in the middle of that. Big market cap of $83 billion. High PE ratio, 30 PE ratio for a company their size is pretty high. Dividend yield a little under 2% there, so they do pay a dividend. Now, they do have a forward PE of 23, so obviously they're expecting to get much more profitable. For me, Starbucks is not yet quite a buy. Is it a buy for you guys? Would you buy Starbucks? Are you currently an owner of Starbucks? For me, it's not quite there yet. Under $50, I'm like, I'm liking this one. And then under $40, absolutely. And I would even be more interested in Starbucks, and it could become a core position of mine if it drops under $40, let's say, and we can start to see some results come from this new initiative that Howard Schultz is pushing with the whole new, the amazing coffee experience they're doing in some of those stores. If we can start to see some results from that and then expanding to some other cities, and then those results start coming in, that would make me feel even more comfortable, because then it wouldn't just be a growth story about China and some of the emerging markets, and more of a growth story about they have a whole new, type of restaurant roastery they have going on, which could very much expand profits and revenues and those kinds of things. So I look at Starbucks and I'm like, it's a decent stock. If you own it, are you going to sell it? Probably not. But I'm just not a buyer, not at this level. Under $50, I'm really going to be interested. Under $40, absolutely, for sure, unless the business was to fall apart, which I do not see happening. So let me know in the comments section what stock you guys would love to see broken down next week. I would love to see that. Hit a thumbs up if you enjoy these videos, guys. And if you have not subscribed yet, you may want to. I talk about personal finance on the channel, talk about entrepreneur tips. I'm an entrepreneur, and we talk about the stock market so many times each week, including doing this series every single week. So don't forget to leave me what stock you guys would love to see broken down next week. Thank you guys, and have a great day.